Hello, Oracles! I get to wear green today. That was so exciting. I would love to see it last longer. So I am hoping that tomorrow for the FOMC meeting, we get the news that we want to hear and the market rallies and cheers this. And heck, even if we don't rally and just stay green, that would be awesome. We will find out tomorrow. Tomorrow, the FOMC meeting is at 2 p.m. Eastern Time. So we will get all of the information that we are looking for then. What are we looking for? We are looking for a 25 basis point rate hike, which Jerome Powell stated he supports. So as long as they stay with that, we should see things going well. Now again, he is going to be having an open interview, so he may say some things, and we know from the past that specific wording that he uses may cause the market to freak out and panic. So as long as he gives us a clear and open timeline as to what their plan is for the future, then we should be okay. We also need to watch the dot plot, because the dot plot will tell us where all the other Fed members are at with their mindsets as far as the rate hikes go over the rest of the year. So right now it seems like about 7 rate hikes have been priced into the market. So if we do see more than that, or they talk about more than 7 rate hikes for the year, we might see the market go red. So these are just little things to take a look at. With how green we were today, we've seen it over the last few weeks. We've seen us having a green day, and then the rug gets pulled out from underneath us, and we go red the next day. So I want to stay optimistic. I want to say that we are going to be green tomorrow. Might actually be red in the morning due to just uncertainty, because we don't know what Jerome Powell is going to say. But then we might actually see the rally come through afterwards if he gives us what we want to hear. And now either way we look at it, this is still near-term issues that are going on. The fluctuations go up and down. We still have extremely high inflation, and we still have a war that's raging right now. And oil prices did come down under $100 today, which is a good sign, because $100 of oil and higher has tended to lead us to a recession in the past. So we're kind of in a bit of a limbo here. Are we going to hit a recession? Are the rates going up going to keep inflation in line? Is inflation going to naturally dwindle as consumers refuse to start paying high prices? Because don't forget, wages always lag inflation, and wages going up will never ever catch inflation. So this in turn leaves most of the country and the world who doesn't have enough to get by on is going to be left further behind. It's going to make it even harder for people to get ahead, because their wages are never going to catch up to inflation. This is why investing is so important, because realistically, the only way you're ever going to get ahead is if you cut back on a few things that you spend money on and then invest a little bit as well to try and get yourself ahead. Elon did state in a tweet, a common knowledge, which is during high inflation times, owning assets are the best way to go, because your assets are going to appreciate. I mean, heck, look at the prices of Teslas right now. They keep on going up. My used car, which is a POS right now, well, it's not. I nicknamed it Vinny. He's awesome. My car has been wonderful, but it's got 170,000 miles on it and bullet holes in the back of it. And the thing is worth, Tesla's offered me $8,400 for the thing. So having assets is extremely important during times of high inflation. So investing in things like, stocks in the stock market are better than having cash, but having assets like, a house, real estate, things like that are a good place to have your money. And obviously most people can't just be like, oh, well, inflation's going up, let me go buy a house. That's not realistic for most people. So, investing during these times, during the dip, that's a good time to do it, because obviously we talk about fortunes being born during bear markets. So if in these times you can invest during the bear market, when we do come out, that will be an appreciating asset for you in the future. So it's just a matter of, investing your money wisely during these times to get us through until inflation does come down. And now again, after looking at the numbers from last year and the fact that wages are not passing inflation, we might naturally see a pullback in inflation later in this year, especially if demand wanes because prices are too high. And we also got the PPI reading this morning with inflation, yes, is high. Month over month inflation, yes, is high. So obviously product prices are still going up. I see it in my business regularly. We're constantly getting price increases from all of our vendors. Lead times of, they'd say 36 weeks. I'm like, dude, just tell me 9 months. Like 36 weeks, that's like saying that my child is 48 months old. Your kid's 4. Just give me the reality of it. I know it sucks, but just tell me realistically where we're at. So this is really where we're at. And being in construction where I'm at, we get a lot of information about raw materials and how far behind the vendors are in getting their raw materials and their raw material prices going up. So yes, inflation is still here. Prices are still going up. That's going to happen for a while, especially with the Ukraine-Russia situation and oil prices being high. But since oil prices have come down, we might see prices dwindle a little bit, maybe come down a little bit. Obviously, it always lags because that little buffer gives the high up people and the wealthy people even more money to play with. It's just the game that they play, and us here at the bottom have to deal with it. But at least if we know the game that they are playing, we can see it and we can try to benefit from it as well. So it stinks that it is what it is and we have to deal with it, but we can. And we can see what's going on and we can invest wisely to better improve our own selves and our own wealth. And so looking forward as to what we've got going on, and we had discussed previously a second dip that may be coming in May. Chicken Genius had mentioned it, and seeing the last 2 years how we did have a second dip come through. If this does happen, and we saw a little bit of a dip yesterday, then the rally today, but if we do get that deeper dip that comes on later, looking at some of the catalysts that may bring it on, could be the inflation, could be the CPI data that comes out in May, might be significantly higher than we think, and the feds may just turn and say, you know what, we're going to do a 50 basis point hike instead of a 25 basis point hike. That could flip the market into a position of, all right, let's throw the brakes on and then pull us down and hit that second bottom. Now, of course, whether this happens or not is yet to be seen, but these are just different scenarios that I'm playing out in my head as far as what's going on in the future. Today, I didn't really make any moves. My job is getting extremely busy right now. So, I'm going in earlier, getting out later, don't have any time during the day. So, we're sitting at a point right now where I can't watch it, so I didn't make moves. But today really wasn't a day that I wanted to make moves anyway. As I had mentioned yesterday, when the market's going green, I want to hold back. Even right now, it's not like we're going to be going green and all of a sudden we're like, okay, now we can go on a full-on rally. We're definitely not at a point where we can go on a full-on rally. So on days where we're going green, I'm still going to hold back. I'm going to hold cash. I'm going to use these opportunities to sell out of things that I may get profitable on, just so I can free up some more cash, because I do see still, obviously, 6 months at least of some ups and downs. Going to take a while for us to come out of this. So, when we do come out, so just so you know, when we do come out of this and we see that true rally starting to begin, that would be a good time to really start adding more money and start adding heavier to your portfolio. We're just not there yet. And my guess is the first step of that is probably going to happen right after the midterm elections. Because at that point, we'll know what's going on with the elections. We'll have understanding and clarity as to, how the politics are going to work here in the country. We're going to have, Russia, Ukraine, if it is still going on. At least at that point, we'll have clarity as to what's going on. We'll be able to handle it better. Hopefully it doesn't grow any larger than what it currently is. And then we'll be able to get by that. We'll understand better what's going on with inflation. And hopefully inflation should be much lower at that point. So I think that might be the first time we start to see us pulling out of this would be post-election. And of course, we do still have COVID. It is still real, and it hit me at home today. Our driver at work left today because he has COVID. His wife tested positive. He tested positive. So if for some reason I don't make a video for a couple of days, it's probably because I have COVID. So I'll try to communicate with you guys probably on Twitter. I'm over there at OracleTim1. So if I do have it and I can't make a video, I'll let you guys know there. But so it is real, and it's holding us back because now I have to reach out to my mechanic to be able to make deliveries for us. And this is just on a small retail scale that we are struggling and having to work through. So imagine that on a massive global scale where people are actually having to deal with this. So it's real, it's still going on, and it still causes, disruptions in the supply chains and everything else that's going on. We got to get materials to these guys on the job, and we're trying to scramble and make it happen. And then what happens in that case is you start putting people in positions and doing jobs that they're not accustomed to doing. And then mistakes happen. We've gone through a huge hiring wave over the last 6 months, and we're putting people in places to do jobs that hadn't been done in a while by somebody. There's not a lot of people to train them. They're not doing the job as they're supposed to. Mistakes happen. And then the people who would catch them on the other end are also new. So they don't know how to catch those mistakes. So there's a lot of inefficiencies that are going on right now in a lot of production and a lot of different workplaces across the world. Again, I'm seeing it on a small scale, and it's massive, and it causes me horrible headaches on a daily basis. These are the struggles that people are going through, and this is the reality, and it's going to take a while until we get through those pieces of it before we get more efficient again. So yes, today was awesome. We got a nice green day today, but we got to be realistic and know that this is, going to also be short-lived, hopefully maybe moving us in the right direction, but definitely still not the time to dump all of your money into the market, but enjoy the day. Definitely enjoy the green day today. Well deserved. We've been hurting for a while. So let me know in the comments below. We're going to take some bets here. What do you think I'm going to be wearing for a shirt tomorrow? Do you think we're going to have a green day, or do you think we're going to have a red day tomorrow? Thank you all so much for watching. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.